We're going to be, let me show you my screen. I guess that would be important. We're going to go through a couple of different products and look at a concept of increasing income. We're going to look at some top early income options. When we're in this working with the seniors, and talking about retirement, there's a couple concerns that often come up, right? Your clients are usually wanting to have a guaranteed lifetime income. They don't want to run out of money. And they're concerned about inflation. How are we going to keep up with inflation? So we're going to cover a couple products that will meet both of those needs. I'm going to go through 3 products kind of quickly today. So I'm going to ask that you hold your questions. Just jot them down. I'm going to be following up with all of you following the webinar. So any questions you may have, I can answer those on a one-on-one basis after. Since we've got a lot of us on today, it'll just help it go a little quicker. So I'm going to jump off right off the bat, talking a little bit about IAMS, just a few minutes. I know there's a few slides here. We're going to go pretty quickly through them. For those of you who don't know me, my name's Laura Johnson. I work here on the annuity side at IAMS. Been with IAMS all totaled probably, I don't know, 12, 13 years. Now I did about 8 years with the admin side, and I've been on the sales side going on 5 years now. So I guess going on 13 years. So had a lot of experience in the industry. Anytime you need assistance with anything on the annuity side, feel free to give me a call. I guess on the first screen, I will point out the number there on the front screen, 800-255-5055. So anytime you need anything on the annuity side, feel free to give me a shout. First thing I'm going to talk about is for those of you who are new to IAMS, just joined IAMS, considering coming on board with us, we can talk about our new producer bonus. This is a great way for IAMS to partner with you. Ultimately, when you're choosing an IMO, it is choosing a partnership. Not only are you interviewing us, but we're interviewing you to see if we're a good match, right? And so what can we be doing to partner with you right off the bat and help you grow your business is really what we want to focus on at first. And as you can see here with our new producer bonus, there's some great options for some marketing help right off those first pieces of business you write with IAMS. So you do have 6 months to qualify for your new producer bonus. As you can see, we've got 5 different tiers with an abundance of different marketing themes available here. So, for example, you write a $100,000 annuity. You can either choose to cash out at the $100,000 level and be done with it, or hey, I'm going to go for the 250 or 500. And as you can see, great way anywhere from paying for some radio, paying for seminars, assisting with social media marketing. You want, one-on-one coaching and a seminar paid for. Need help doing a whole build out on your website and stuff. Those are all things that we can do here at IAMS internally. Want to help you, partner with you. We help you grow your business, then we're growing ours. So I think it's a great opportunity. Once you cash out your new producer bonus, again, 6 months to qualify. There are some restrictions as far as, indexed annuities, count dollar for dollar, fixed annuities are half. And then, so if you do, and it does not count for controlled business. So if you have questions where you stand or what's going on that, give your marketer, myself, a call. We can look into it, see if you qualified for it. Once you're done with the new producer bonus, we do slide you into a marketing reimbursement program. Our marketing reimbursement program, for every 100,000 of annuity premium, gets you $100 of marketing reimbursement. If you're doing 10,000 of life target premium, that would be equivalent to $200 marketing reimbursement. And if you do 100,000 of single premium life business, then that would be 200 as well. So just constantly, all the business you're writing, you're just building marketing dollars essentially. And you can use those for outside marketing themes, or if it's stuff you want to use internally to have us do for you, those are things you can use internally as well. So if you're curious what's in your marketing reimbursement account, give the accounting a call. They can get that totaled up for you. One other program I think is really important is our referred producer program. As you guys know, in this industry, your business is built on referrals. So is ours. So, if you refer a producer over to IAMS, who may, get some positive things out of working with IAMS, $50 when they get contracted, $100 when they write their first piece of business, and essentially thousands thereafter for, 20 basis points on all the business they write thereafter. So just a great way for us to say thank you. This doesn't come out of their commission, doesn't come out of yours. This is IAMS just saying thanks for the referral. Great way for you not to take on the responsibility of an agency or a hierarchy as well. All righty. If you haven't been with IAMS very long, or you're brand new, first time joining us, or or if you've been with us for a long time, you can probably attest to this. IAMS' number one goal is not to be the biggest FMO in the country. That's not it at all. We want to be number one when it comes to service. That means, first of all, we have a 3-ring guarantee. That's picking up the phone every time you guys call. And getting those questions answered right away. If you ask to leave me a voicemail, they're going to say no, but I can take a message. We do that for a reason. I mean, last thing you want as an agent, if you need an answer, and you have to leave me a voicemail and I don't get back to you for 2 hours, what if you called and someone else knew the answer and could have helped you out with that? Or you needed this illustration on a timely manner and I was in meetings. That's the reason we do the 3-ring guarantee, answer the phone, no voicemail, is we want to be sure that we are meeting your needs when you need them met. Um, Also, working with IAMS, it's not just picking up the phone, but it's doing your case design, helping you get forms, making sure you're compliant to write business, doing that back office support that a lot of you don't have assistance with in your offices. So if we can help take those things off your plate, help you run business, help you write business, you know, easier. That's our goal. So, and also we, once you write business, scrubbing those applications, Amber and her team do a phenomenal job following up on business, chasing money, making sure everything's in good order with these carriers. So if we say from submission to commission, they're going to be assisting you along that way. Even after, with service into inquiries, getting RMD checks out. I mean, we can assist with moving companies along. So we also do have a paperless contracting system, so really want to make it as easy as we can to do business with you. So we are on the SurancePay platform as well, so pretty easy for contracting. Like I said, we do have a full service creative department here in-house. Sean, Chance, Ryan, Jacob, they all do a phenomenal job for our agents. Anything from maybe you're new to the industry and need a logo and a business card design, to then taking that, needing a full website design for you. We can do all of that internally. Maybe you want to do a newsletter. We can design those. We've got some that provide content, some if you want to do your own content. You're wanting to do a mailing, we can help design the postcard. All social media campaigns, we've been doing a lot of those lately. Those are all things that we have a team here employed by IAMS who does that stuff all day long for you guys. So creative team is here for you. If you have a project you're working on, give your marketer at IAMS a call, give the creative team a call. They're happy to see what they can do on that. If you haven't been out to our website, it's www.imsinc.com. A lot of great resources out here. I'm out on our website all the time. I'm just going to point out a couple things. Under the products tab, you have access to several quoting systems. You've got a pipeline for the life insurance. You got a Medicare quoting system, and then we actually give you access to Annuity Rate Watch through our website. So that's great to be able to go out and compare rates. I do income writer quotes out there all the time. We've also got an EAP solution now on our, I think it's called EAP Solutions is what the drop down on the top of the website says. But under that, you have access to 3 different EAP platforms. We've got Firelight, which a lot of life and annuity carriers are getting on that platform. We've got one for Medicare and we've got one for life insurance. So really it's a one-stop shop, single sign-on. You sign into your IAMS website, you can do your EAPs there. So we really like that. And then under the support tab, there's a lot of great things. Our marketing corner out there, which gives great articles, client-facing things as well. But if you look under the support tab, there's this thing, the sales resource library. It's great. A lot of tools there just for you, whether you're looking for a specific fact finder. Maybe a client says, what's a stretch IRA? Well, if you go under the support tab and go to client presentations, there's about 75 different client approved topics, one of them being stretch IRAs. It's probably a 5-page document on everything they need to know about a stretch IRA. So there's just a lot of great tools out there. Like I said, fact finders, financial calculators, client presentations, a lot of great tools. So if you want the little elevator pitch or go through the website with someone, you can give myself a call, Scott Earhart. Any of the marketers on the life or the annuity side should be able to kind of guide you through where all these things are. A couple years ago when the DOL was kind of hanging over our head, it was time for us to jump in the security side of the business as well. So we do have an RIA here in-house as well, IAMS Wealth Management. We really built this for the insurance producer. A lot of our advisors, didn't have their didn't have their securities license when we first got started. And some of our top agents or some of our top advisors now really adding, I think it's a valuable part to add to being a full financial advisor. Not only can you handle their insurance, their Medicare, their life insurance, their fixed annuities, but now you can help them on the investment side as well. I always use the example: you go into a household and the client's got 500,000. Okay, AIG says they're only going to take 350 of the annuity for the annuity. If you don't have an outlet for that other 150,000, you're just allowing another agent to slide in there and potentially steal that client. So we think it's a really valuable thing. We've got two different programs. If you're 65, licensed 66, or you're CFP, you can register with us really easily. If you're looking to study or potentially get your 65, you're just kind of in limbo, not sure what you're wanting to do yet, we do have a soliciting program as well. So as I talk about that, I'm going to throw the first poll question up. If you want information on our platform, IAMS Wealth Management, anything that they've got, money manager stuff, if you answer yes to the question, that's just going to generate a phone call from Mike Hansen. He's just going to call, see what questions he can get answered for you. With the soliciting program, depending on the state you live in, if you just don't want to get your license or you're studying and you want to refer clients over, we can manage those for you. And depending on the state you live in, pay you a portion of that fee while you're preparing for your exam or whatever. So once you do pass your exam, we will transfer all those clients directly back to you. So just a great opportunity, we think, to offer that service to our agents so that they're not potentially losing their clients to other advisors. All right, if those who haven't answered the poll question could answer real quick, we'll get moving forward. All righty. Only got a couple more slides. We'll get to the products. This is one of my favorite things to talk about. It's our Life and Annuity Academies. If you've been to one of these, you'll know we fill you with a lot of information over a 2.5-day period. We're going to be doing our next one here in May. We're really excited to be partnering with Athene on this. So we're going to be flying 40 to 45 agents up to Athene's home office May 6th through the 8th. So we'll fly you in on a Wednesday, fly you home Friday afternoon. But it's a really great opportunity for, number one, rub elbows with 40 other people out in the field doing what you're doing every day. We bring in 3 or 4 of our top agents are going to be there sharing what their exact marketing programs, what they're doing to get in front of clients, what they're having success with. They've been in the industry a while, what they did not have success with. They're going to be there to help you put together a marketing plan as well, give you some unique ideas. We'll obviously have some Athene people there speaking as well, but I really tell people it's not annuities 101. It's not life insurance 101. It's how can we help you grow your business? So we're going to present you with a lot of ideas. And essentially that's the goal. It's going to be in-depth concept, techniques, ideas versus here's what an annuity is. So really for more the advanced producer looking to really grow their business here in 2020. Requirements for this, I am going to throw a poll question if you are interested in attending. We do these 3 times a year, so if we can't get you into the first one, we're going to do another one, I know, in July. Answer yes, that'll get you out the registration link. I will say it's a pre-registration link because there are a few things we need to get in place. We do require that you are contracted with IAMS, with the carrier that we're sponsoring the event with, so this one would be Athene. Other than that, there's no production requirement. I will tell you that Athene does get a pretty big say-so in who we bring into the academy. So if you're right in business with Athene, you're probably on their preferred list, which always helps. So if you're new to IAMS and we can get you up and running with Athene, get a piece of business in, there's no reason why we couldn't get you into the academy. All righty, well, I'm going to close that poll question. We got 2 last things to talk about, and that's 2 different trips. People always love trips. What's nice about this is we've got 2 qualification periods going on at the exact same time, and all your premium counts for both. Well, not all. Your Athene premium counts for both. The first trip we're talking about here is going to be August 26th through the 29th of this year. It is an IAMS and Athene event. So all the premium you write with Athene through IAMS counts toward this trip. We're going to be taking you and a guest if you qualify to the Montage down in Cabo. So we're really excited about this event. It's just a great way for us and Athene to say thank you for the partnership, thank you for the business, and we're really excited about it. Qualification's $3 million. It started in July of last year and runs through June of this year, so plenty of time to qualify. The other trip I'm going to talk about is the IAMS exclusive trip. This is just for our top agents here at IAMS. There's 2 parts to this trip, so I'm going to talk about both parts. The first one, $3.5 million, qualifies you and a guest down to Mexico, March 7th through the 11th of next year. We're really excited about it. So 3.5 million gets you there. That's all your production, your life business, your annuity business, your Medicare business. They're all earning you trip credits, and it takes 3.5 million trip credits to get on this event. And then what we're going to do is we're going to piggyback that few days with going off to another island, March 11th through the 14th. And this will be for our elite producers. So 6.5 million qualifies you, 8.5 million guarantees you a spot. We're looking to take our top 20 guys. So really excited about this. If you're curious where your trip credits stand, give your marketer a call. We've all got the list at our desk and can give you your updated numbers. And again, all your business for Athene is qualifying you for 2 trips. So you write 3 million with Athene. Well, you've already got 3 million toward Mexico as well. Some great opportunity there. I don't know why that slide was there. All right, so now let's jump in and talk about why we're here. Tried to go through those as quickly as possible for you because I know your guys' time is valuable. So we're going to go through, like I said, these products a little quickly, a little bit on the quick side. And why we're talking about this, I kind of mentioned it up front. If the slide will go. We're going to look at some opportunities to give clients some better income opportunities. We're going to, like I said, help them keep up with inflation. And we've had an increased competition in this marketplace. So there's more and more innovative products being introduced all the time. So if you've joined me on this webinar, you've heard it before. I've really stuck with these 3 products. I think they're really important. As there's more competitive products that enter the industry, we'll be happy to add them on as well. So I also do one at the end of the month with more long-term deferral. This is looking for people who want income, in the first 10 years. What the client can expect from these products, opportunity for increasing income. I always talk about the power to retain control. I can't explain how many times an agent calls and says that a client wants immediate income and they're asking for a SPIA. And I just cringe a little because with a SPIA, you're signing a dotted line, your destiny. It is what it is. You can't go above what they're going to give you. You can't go below. You signed your destiny on a dotted line and you lost all control of your assets. With some of the products we're going to look at today, we're going to put that control back in the client's hand, give them a competitive income still, and let them have complete control. I always say, with some of these products, you want to take the kids to Disney. With some of these FIAs we're going to look at, fixed index annuities, we're going to be able to dip in if we wanted to a little more than we're supposed to. We still have control of our assets because we want to take all the kids to Disney World. We have the control of our assets. We'll dig into that a little bit more here in a minute. And then they're going to have an income that they can't outlive. I think this is the reason we're mainly talking about it, as I said it. Inflation, inflation, inflation. It's something that's not going away. You look 10 years back, what gas was, what milk was, eggs, anything. And you'll see that today, it's much higher. That's not going to stop. That's not going to go away. So really educating your clients on that's important. So like I said, we're going to go through 3 products. The first one I think I'll say this up front, each of these has a time and a place that they're, I think, a good fit. When we're considering increasing income, not every product's perfect for every situation. So we're going to look at what I feel like is good opportunities with each of these products. The first one we're looking at is Athene's Ascent Pro Bonus. The issue ages on this is 35 to 80. Minimum premium is $10,000. With this product, you can take income as early as 30 days after issue. It works for both qualified and non-qualified money, both for single and joint payouts. A lot of people question me on that with qualified money and joint payout. It can happen. Money has to move like to like. And if my spouse wants to be in there on the joint payout, I have to make him the primary beneficiary. And at the time when I go to activate the income, I have the option to do single or joint if he's the primary beneficiary. Rider fee on this is 1%. The easiest way to describe this product is tell you that you have 2 choices. Number 1, at time of application, we're going to pick how the account's going to grow. Number 2, when we're ready to turn on income, we get to decide how it's going to pay out. Obviously, there is a guaranteed and a guaranteed plus multiplier, as you can see on the screen here. We'll look at for how the money grows. We're really going to focus on the multiplier aspect of it, but I think you'll see there's some great things that can be done on this product. Alrighty, so with Athene, you got a lot of different indexes. If you've written Athene, you've noticed they've done some switching up lately. We actually had some of the money manager or people from the banks that created these strategies in our office last week. Really cool to hear how they have designed these strategies. The technology that's going behind some of these strategies now is really exciting. So we got obviously got traditional S&P, your daily risk control S&P. They've got the BNP Paribas that's been returning really well lately. And then they got rid of, you don't see Janus and Morningstar on here anymore. Those are both gone for new money. But they've added in a NASDAQ strategy, which uncapped. It's a volatility control index. If you look at NASDAQ and all the companies that go into what NASDAQ's invested in, I mean, there's Amazon, there's Starbucks, there's all these big name companies. And then the other new strategy they just did is an artificially intelligent equity index with IBM Watson. So some really unique new age kind of strategies. We're really excited about it. They've got some unique technologies on the backside of these that can prepare for things that are going on right now, like the coronavirus. They were in here showing us how they had positive returns in some of these indexes, even with the market doing what it's been doing the last 15, 20 days. All right, with this product, you got two options, like I said. First of all, we're going to pick how the money's going to grow, and then we're going to pick how it's going to pay out. So number one, we're going to look at how it grows. On the guaranteed side, it's 10% simple for 10 years. We're not really going to look at that, but that's that yellow line right there. What we're going to talk about is a 7% simple and 200% participation, right? So as you can see here, we're going to start a little bit lower, and we're going to talk about that in a minute. It's just a little bit less of a bonus, but the roll up on this is going to be 7% guaranteed every year. But then on top of that, we're going to get 200% of interest credited as well. So for example, let's just say 4% interest credited in the first year. Well, 4 times 2 is 8. Then you add that with 7, that's 15. The guaranteed one got a 10% simple roll, but we took a 15% bump, right? Off of a simple 4% return. I saw a statement the other day where a client got 13%. Multiply that times 2, they saw a 26% bump in their benefit base. Those are the kind of conversations we want to have. So as you can see here, you're going to start a little lower, but look at these dotted lines. Even in the worst case scenario, over a 10-year period, the guaranteed grew, it is what it is, to 210. Even in the worst case scenario, we grew that benefit base to 271. That's the power of the participating, the multiplier, which you'll hear multiple times during this presentation. So number one, you got to pick option 1 or option 2 when you sign the application. How is the money going to grow? Then we're going to look at how it pays out. There's 3 different options. Level, it is what it is. It's predictable. It's never going to change. Clients like it for some reason. What I want to talk about is the increasing income. So Athene has 2 different options they've got with this besides the level. My favorite is this earnings indexed option. So what this does is essentially once you activate income at Athene, if you pick the earnings index, if you earn 4%, your income's going up by 4%. So it's a great way to, as we go through retirement, have that protection for inflation. Like I said, the level is going to start a little higher. We're going to talk about a lot about payout percentages. Payout percentages are so important. You can have the biggest bonus and the biggest roll up and not be anywhere near competitive when it comes to income if your payout percentage is not there. So it's very important to have choose a company that has some competitive payout percentages. So with the earnings index, you are going to have a lower payout percentage to start with, but then every time you earn interest, it's going to go up. So, we're going to start at 82.95, but in the worst case scenario over 10 years, we grew their income in the worst case to 11,000. Those are the kind of phone calls we like to have. I had someone the other day call and tell me that their client got too much money from AIG, and I'm like, what are you talking about? Well, they earned 9%, so they got a 9% increase on their income. Client was pretty happy with us by the end of that conversation. So those are the kind of things we want to see happening. We want to give those clients those exciting moments where they actually got a pay raise in retirement. So earnings index bases it off of any interest credited. Again, that payout percentage is lower than the level. The other one is an inflation adjusted income payout, meaning that anytime there's a fluctuation in the CPIU inflation index, you're going to see an increase. As I mentioned, payout percentages are a lot lower. On the CPIU one, on this inflation adjusted one, It starts really low. I'll show you the payout percentages here in a second. But still, we know that with inflation, it's going to continue to grow. So it does give them opportunity for increasing income. But unfortunately, those payout percentages do start a lot lower. So again, at time of application, how are we going to grow the money? At time of when we want to turn on the income, that's when we're going to look at how it's going to pay out, level, inflation adjusted, or that earnings index that we just looked at. I'm going to show you a couple of illustrations. Again, my favorite payout was the earnings index, so that's what I illustrated. I do have to always illustrate zeros just to show you. I used it, like I said, all these products have a time and a place. I think Athene Spot, since you do have that 7% plus 200% for growth, I think this is good for that client who maybe wants to defer a few years. Got that client who 65 looking to turn on income at age 70, but is adamant about increasing income. 500,000 is what I illustrated. Put 500,000 in, it grows by 7% simple and interest. So we can see that benefit base growing. Well, this is the guaranteed. It's not that exciting. Guaranteed wise, 26,950. Let's look at the non-guaranteed. You can see this benefit base growing much faster than the accumulated value. So instead of guarantee of 26, we're now looking at potentially starting their income at 33. Not only that, but just look at this column here of lifetime income withdrawals. 33, 35, 36, 38. It just keeps going up. And that's what's nice about this product. I illustrated this very conservatively, 3.79. Even hypothetically with a very low interest rate environment like we're in today, look at the potential of the growth on this product. And think about those calls you're going to get when the client gets a pay raise. Those are the kind of conversations we want to have. So I really think that Athene's going to be the competitive one for that person that wants to defer a few years. Now, I'll tell you right now, if you go put this in annuity rate watch 65 and take income at 70, it's not going to be competitive. There's going to be someone who beats the 26 that we saw on the guaranteed page because we only have a 7% simple roll up that we can guarantee. Add in that interest, and there's some great potential with this product. Here are the payout percentages for Athene. I'll be showing you all of them. As you can see, when you look, let's just look at a 70-year-old, level versus earnings index versus inflation adjusted. There's some big differences there. So they are very important. But it depends what your client's goals are. If your client's goal is to get the most bang for their buck day one, then this probably isn't the product for them. If they're looking for the potential to keep up with inflation and not have to worry through retirement, this is a conversation we want to have. All right, second product. AIG's multiplier is probably one of my favorites to talk about when it comes to increasing income because you can take income right away and have increases right away, and we'll talk about some of the other advantages as well. Minimum premium on this, $25,000. Issue age is 50 to 78. You can start income 30 days after issue like you can on Athene's, both qualified and non-qualified money, single and joint payouts available for both. Rider fee on this is 1.1. What's different about AIG is it grows 100% based on interest. There's no guaranteed roll-up. So this isn't for the client who wants to wait 5 years. This isn't for the client. This product, I think you'll see as we go through it, is for that client who wants income and wants it today, 30 days after issue. This is the product we're going to use to compete with SPIAs. So the way the product works, 200% of interest is credited during deferral. So I think I said on the last one, I had a person who earned 13 and they got 26 credited. It was in this product. So in this example, though, 4% interest earned times 200% multiplier. In that example, in year one, 8% would have been credited to the benefit base. They've always used the word multiplier. And then recently they kind of switched their marketing a little to double. It's easier to say that we double during deferral. So any interest credited is times 2 during deferral. And then once we turn on income, we match it. So once we activate the income, so if we start income day one, forget the 200%, it doesn't even matter. We're just focused on the 100%. That means that 4% interest earned is 4% increase. So example here, this example, they used 100,000. So let's just say initially your payout percentage is 5% of 100,000. Okay, your annual income for life right there is $5,000, right? Sorry. Give me just a second. I'm going to take a drink of water. Okay, $100,000. Well, let's just say we earn 4% interest. We're still going to get that 5% payout percentage, but instead of on 100,000, now we're going to get it on 104. We increase the client's income. They've got a really nice, so what they say is they say double during deferral, and then we match once we turn on income. I think this is my favorite slide for any increasing income story to tell. It paints a really good picture. If you're anything like me, you're much better when you see a picture than when you read a bunch of words. So I think this just explains the whole concept within a picture, because I really believe that people don't talk about increasing income near as much as they should because they don't want to confuse their clients. It's a lot harder, it can be a harder of a sale. Easier to go in and say, hey, you're getting a 20% bonus and $20,000 every year for the rest of your life than saying, hey, we're going to start at 17, but we're going to hopefully grow to 30. Those are conversations that are hard to have. So I think this does a really good job of painting the picture. So let's just see here. We used 100,000, 62-year-old, right? We are right here. We're 62-year-old. So we earn 3% interest, right? You can see here we're during deferral. So we got 6% credited. There was no interest in 63, so we stayed the same. Here in 64, we had a 4% interest credited. So as you can see, they did 8. Again, double during deferral. Then you see there's kind of a shaded line here starting at 67, because that's when they started taking their income. This purple or darker line here is your cash value, just so, like I said, paints the whole picture. So after we turned on income, 4% interest earned. Look, we got a 4% bump. Had a couple zeros, so we stayed the same. People always ask me, can the income go down? No. Once it goes up, it's locked in. So once you go up, it won't come back down. Then here we had 5%, so we got bumped up. And as you can see, that just continues to go. With AIG, you're going to have increasing income until your cash account hits 0. Then we're leveled out for the rest of our life. We're essentially giving your client 14, 15 years of increasing income. Cash is gone, but guess what? This income that we grew it to is their new income for the rest of their life. It's a really great way to keep up with inflation. And I just love how this really talks through all steps of this product in a picture form, because I know when we're talking to 70-year-olds sometimes, or some clients who just aren't a numbers person, or it just seems confusing. If they get too confused, they're going to shy away. So if we can just, instead of talking all the numbers, show them the numbers, I think it's a really great way to make the sale. I have to update this slide. With AIG, we got a lot of great volatility control indexes as well, and some traditional ones. Obviously, S&P Russell 2000 is now with AIG. PIMCO Global Optima Index has been a great strategy. It's a mixture of emerging markets, international, and it's got a bunch of U.S. large, mid, and small in there as well. So it's a really global index. What's really unique about it is a total return index. So you're not only getting the returns on that, but you're earning the dividends as well. So some really great opportunities for that to be a home run hitter. Merrill Lynch Strategic Balance Index. I've been following this on a daily, multiple times a day. It's been really unique to see that Merrill Lynch is actually stuck with, overnight they dropped almost a point, but their 1-year return is still well over 14% on a 1-year return. Even with all these 2,000 negative, down 2,000 points in the market, they've still seen really great returns. So we're really excited about that strategy as well. Again, these both have participation rate and spread options, 1 year, 2 year, things like that. And then AIG just partnered with AllianceBernstein as well. So it came out with another index as well. So they've really got a great option. I think diversification is really key. If you look at a lot of different indexes, are all the certain indexes going to hit every year? No. If you look at some of those flow charts that companies put out showing what index performed best in what year, very rarely do you see one at the top all the way across or anywhere near all the way across. So diversification is key. And when you'll see here on the illustration, I did a lot of diversification. This is obviously your guaranteed. I think, like I mentioned, time and place, 500,000 in. I think this is good for that client who wants income and wants it today. So I did a 70-year-old, 500,000 going in. We can guarantee 30,000. Here's where it gets exciting. Look at this. I used S&P. I used some Merrill Lynch. I used some PIMCO. I will point out, everyone brings this up to me, that if you look down here at the total credited interest rate, it only says 2.74, which makes us quiver a little bit. But I just want you to take into account that their years 15 through 25 are all zeros. So if you really add up years 1 through 14 and divide by that, you're going to see a closer return to around 4%, 4.5%. But assuming 4% return, which is pretty average in an index annuity, look at how we grew this income. We went from 30,000 over 14 years, hypothetically, to 57,000. Power of increasing income right there. Those are pay raises in retirement that clients are seeing, hopefully, annually. And when you diversify it like this, is this the best way to illustrate it? Now, if I want to make, see a 7% return or whatever, I can overload it here in PIMCO, right? But I don't want to do that. I want to be realistic, right? So with this diversification using 3 different indexes, I like to point out that in these 14 years where we earned interest, how many zeros do we see here? There was only 1 0 in year 7. That's it. So that's a really great story to tell with diversification. That, are we going to have double-digit returns all the time when we diversify like this? No, probably not. But the nice thing is that our clients are earning interest. They're getting pay raises. With this product, it's all about those pay raises, right? Yes, we want to maximize the pay raises as well. But if we can, 13 out of 14 years have a positive conversation about them seeing an increase in their income, those are great stories to tell, great situations to have. So again, we put the start at 30,000. As you can see, year 1 wasn't too stellar. We got 1.69. If you do the math here, 500,000 times 1.69%, you get 108,450. So we got the same payout percentage, just on a larger amount of money. So our income in that first year off of 1.69, we grew $500,000, or not 500, $500. I wish it was 500,000. So we went from 30,000 to 30,507. Okay, and the next year we got 13.74. Oh, look, we had a really big jump in our benefit base, and we had a really big jump in our income. So I think it's really important. What I said about payout percentage being unique with AIG is, if you look here, we only see one set. Well, there are 2 sets of payouts, but that's because it's single and joint. But they have a guaranteed income rider as well, just like Athene does. And they have this multiplier. It's actually one product. Just pick which rider you want. The payout percentages are the exact same, whether you want guaranteed income or increasing income. So it's a really attractive thing. I mean, at 65, having a 5.25 payout percentage, not easy to find everywhere, especially with increasing income. So I think this is a really powerful story to talk about, especially when you got those clients looking for a SPIA. Let's give the control back to the client. They may have to start a little lower, but we're going to hopefully surpass that within a year or 2, and then blow the socks off of it within 10. So payout percentages are really important. Third product we're going to look at here quickly is North American's Income Choice 10. Minimum premium on this is $20,000. Issue age is 40 to 79. You can start income. What's unique about this one, you do have to wait 1 year to take income. Again, qualified, non-qualified, single and joint. What I love about this product, we all have those clients who don't know what the heck they really want. I might need income, I might not. There's no rider fee, so we're not putting clients, tying them to a fee for something they're never going to use. One thing that disgusts me most is when I have to put clients somewhere, they think they want the income, but you're looking at their financials, they really are never going to need the income. I hate seeing people pay fees for something they may never use. And if you look at the history of income riders, a lot of people don't ever turn on, or I'm replacing products all the time right now with old income riders that the clients decided their financial objections have changed. So I think this is a great solution for a situation where clients not sure what they want, because there is no rider fee. They're very traditional over at North American. If you've worked with them, or Midland, S&P heavy, they do have some daily risk controls that we've seen some nice double-digit returns out of this year, actually. So some really good indexes there, but more traditional. The way this product works, you get a 5% benefit-based bonus right off the bat. The product grows at a guaranteed roll-up of 2% plus 150% of interest credited. I slid through that slide pretty quickly because this is the better one. This helps paint the picture. Again, that picture thing I was talking about earlier, this is another good one. And I'll make sure at the end to see who wants copies of this presentation or the slides and stuff. But I think this is another great one You know, we've all had those conversations with clients explaining account value versus income value, and they think the income value is cash, but it's really not. So I think this helps explain it. We put 100,000 in, 100,000 is 100,000, right? Obviously, the benefit base gets that 5% bonus. Cash value is still 100. You know, oh, Allianz has a 15% bonus. Clients think they're getting that to the cash when they're really not. So I think this helps explain. Now that's on the benefit base. If you die, your beneficiary is getting 100,000. And then here's how the product works though. That 2% guaranteed roll up. In this example, they use 3% interest credited, multiply it times 150. That's 4.5 plus the 2 guaranteed. In this example, with 3% interest, we would have seen a 6.5% increase, bump over on the benefit base. As you can see, 3% interest gives the accumulation value up to 103. So I always tell clients when we're looking at this example, if you die after the first year, your beneficiary is going to get 103, not 111,825. So I think it just again helps them understand the two different values. I think again, I mentioned this is for that client who may not really know what they want or really afraid of fees, but wants income probably in the first 10 years. This would be something we look at. So I just showed 500,000 70-year-old taking income after 1 year, guaranteed with 0 interest. We can do 25,436. Even just with 1 year of interest, they credited, as you can see here, 5.41. Multiply that times 150 and add the 2%. They got 9.73 credited to the benefit base, which brought their income up so that when they started income in year 2, it was 27,000 instead of what was it, 25. You know, that's after 1 year. And then as you can see, they turned on income and they do have increasing income for the remainder of their life. So again, a great way to give them that increasing income. Is it the most competitive increasing income out on the market? No. But is it an opportunity to give your clients the opportunity for it without any fees? Most definitely. And they will continue to grow even after cash is gone as well. So AIG is really one of the only ones that cuts it off at the cash accumulation when cash is gone. But at that point, when you're looking at the numbers, clients usually in their 80s anyway at that point, and really you got to kind of do some numbers, but you know what's more competitive up front and how long would it take to catch up, and you got to do that kind of figuring. But again, North American, another great option, A+ rated carrier too, which is always nice to tell clients as well. They do have 2 separate payout percentages. As you can see on the left side, it's for level payment. I don't know why we'd choose level. In my opinion, I would always go with the increasing. Yes, we do take a payout percentage cut, but at the same time, the power of increasing income. I'm glad you guys, I didn't have any questions. Everyone pretty much kept them to themselves. Hopefully you jotted them all down. If you do want information on the products we covered today, just go ahead and answer yes to the poll question. We'll send you out. Ashton, my assistant here, will email all of you guys a copy of the rate sheets and the brochures, things like that. I will follow up with each of you individually following the webinar either later today or tomorrow. So think of any cases you may have in the works. We're seeing rate changes by the minute, to be honest. So if you got cases you're working on, give our office a call. Let's get those submitted before rates drop in the next week. Again, appreciate y'all taking time out of your day, and happy Thursday.